Hey traders, Nick Shaheen here, recapping week ending December 12th, 2014. A fantastic day to end the week, fantastic being bad. The markets scoreboard, red across the board, down 1.8%, the Dow down 1.6%, SPX, NDX held a little better, down 1.1%. RUT small caps down 1.2%-ish. What happened? The week ended on a sour note, and everybody's blaming oil. I kind of disagree a little bit. Oil was a factor, but if you look here, this is the day's recap. This is the S&P 500. It opened up, shrugged off a really deep open, 20 points down or so, and then gave it a little bit back, and then dropped, and then stabilized, and then pretty much stabilized for the rest of the afternoon until within about half hour to go or so, all the way down. But if you look across oil's low of the day was middle of the day. So whereas the markets tumble to their lowest towards the end of the day. In fact, we're partying like it's 1999. We're in the 1990s on the ES, the E-minis. And same story with the Nasdaq. This is the NQ, and again, the end of the day was the weakest. Not so the oil. So there was something else at play. A few other variables we watch are bonds and rates, the 10-year rates. 10-year rates got clobbered today, down to 2.1-ish. That's 3.4% down on a day. Bonds up 1.4% almost. And the bonds rallied into the close. So if I were to attribute one for one, rally into the close at their highest, almost high of the day, actually, indeed, which tells me that it's more likely to be the cause of the drop in the ES, period. So yes, oil contributed, but I think there's something else at play, other variables. The yen is also green, but it didn't spike into the close. So I'm going to, some other things are at play. I think it's more political at this point, especially that we have uncertainty going into weekend. Yes, the House passed the bill last minute, thank goodness, how the spending bill avoiding a shutdown in the government. However, now we have another looming deadline over the weekend, and maybe some people lightened up over the weekend. So, what to do next week? If Monday comes across and we don't have a government shutdown, then we may have a chance to stabilize. However, we do have a heavy week with regards to economic events, the main of which are some inflation numbers on Wednesday, and also, more importantly, the Fed decision, or as importantly, on the rates. They're not expected to move on the rates, but markets maybe started to price in the exclusion of some bullish terms like extended period of time or whatever people are expecting. For me, I think they're going to say the same thing. We don't know what's going on. We're just going to react. They call it data dependent. It's meaning we're going to react to whatever the markets hands us, and whatever we end up doing, we're going to do it very slowly, so we make sure not to rock anybody's boat. That's what they're going to say. It's what the market is going to interpret is what drives prices as far as the stock market is concerned, and that's what I worry about. So, how do I trade next week? Given that it's a headline week, I can't lay down big bets because it's headline. With headlines, fundamentals go out the window. It literally, you can do all the homework you want. You get a bad headline that doesn't have anything to do with your stock, and boom, your stock is down. So what do? You start building positions and stuff that you like that got hammered. If you like retail and retail got clobbered, then you add. If you like MasterCard and you see MasterCard is down 4% today, maybe you add some MasterCard. How do you add it? I don't usually jump in and buy the stock because of all the uncertainty. That would be an investment. I would rather invest or participate on the upside with doing a small debit call spread. This way, if I'm right that it's time to buy MasterCard, then I participate by gaining with that debit call spread. I buy a call, I sell a call higher, or I even buy a naked call out in time, and I give myself time. I don't go out to like four days to be right. I give myself a couple months to be right, maybe even a leap out 6 months or something. If I'm correct over time, then I'm going to be green. If markets are going to be correcting and crashing, then everybody's wrong. So fundamentals did not change overnight. What changed is sentiment, opinion, fear. the fundamentals are still the same. The US is doing fine, Europe is not, and we're expecting a European QE. Those haven't changed. China is growing, but everybody doubts their numbers. That hasn't changed. Japan is an experiment. Everybody expects a disaster. That hasn't changed. Greece is new, but it's we've seen this before. So, and today they were green after tumbling. And oil is low. We've seen oil prices this low before, but now it's part of an economic war, and nobody knows where it's going. How long is this going to stay low? I think OPEC member is going to be screaming at Saudi Arabia in order to stabilize the prices. So you see, there's so much going on that you cannot pile into a trade because of conviction based on fundamentals. You're correct, but fundamentals will take a back seat to headlines. Wait it out. Nibble. Take half a position. Do debit call spread. Do debit put spread if you're bearish. So just imagine, the headline coming out saying we have a new QE from Draghi. That will rip the markets up 1-2% in a couple of days. And conversely, if they say we don't have a QE, we can't agree on anything, that's going to drop the market considerably. So headlines. Okay. So what did the week look like? Really quickly, we'll look at the SPY first for trends. All right, this green trend right here has held for 2 years. This is every candle is a week. This was the correction that we had. We spent only 3 weeks under that, and 2 of which deciding that we're gonna wait a minute, we made a mistake, and in 1 week, 2 weeks, we erased all of it, which was pretty incredible. And then we rallied into the resistance again, also standing for 2 years, and then we dialed down from it. And here we are kissing the bottom end. Last time we kissed it, we broke through it. We kissed it a couple times, bounced. So will we bounce off? I think that if we don't have any headlines based on what's going on with companies, like Apple's not going to make any less money, and Google and Alibaba and Chipotle and all those companies are not falling apart. They're still making the same amount of money they made last week and the week before that. So leave the markets alone to trade fundamentals and no headlines. We should stabilize. Having said that, I'm not willing to bet the farm on it, and I'll just trade the ranges that I get dealt. And every week I look at the ranges, I update them daily, and I trade accordingly. So nibble, not big bites. The Qs this is the first red week in 1, 2, 3, 4, 5, 6, 7, I think, I'm counting here, green weeks in the S&P. We're allowed. It came on heavy volume, but it does that on all downsides. And the Qs have had 2 weeks in a row of red. Last week was mild. This week, not so much. And is this the start of something bad? I don't know. We'll see. Let's see if we can draw a line here. Nothing is scientific, but it does look like if we had any trend, it broke a little bit here. But it's too soon to tell. So what about the small caps? The small caps is a basket of more stocks than just a few. So I tend to want to listen to them, and it's a little scary because of the rises and falls. It's choppy, to say the least. So the small caps scare me a little bit. So do I panic? No, I still want to trade the ranges, and the bull trade has been the easy trade this year and last year, although this year not as easy as last year. So just pick good names, try to go long them if you like them, and don't gamble with large positions at one time. If I have good conviction that I can go along the SPX, I'll nibble. I'll take half a position and wait until Monday, see what happens, or wait until Tuesday and see what happens. So thank you for that. Come Monday, I will review the data before they open, and I make my own decision as to how I want to trade it. I'm not going to pile into any position. We are in headline mode, and in headline mode, it's best to dial it down a little bit and just watch the show a little more than you usually would. Nick Shaheen signing off, December 12th, 2014.